Welcome to Subramani. On 17th of January, the Sensex dropped 1600 points and the Nifty cracked 2%. And every one of us is wondering why, what happened. Okay, let me give you the precise numbers. The Sensex tanked 1628 points or 2.23 to end at 71,500. While the Nifty tanked 460 points or 2.09% lower at 21,571. Barring the other than the Nifty IT, every other index was down. I think FII selling was approximately 11,000 crores. Now, did the FII selling cause the panic or did the panic cause the FII selling? We don't know, but normally FIIs wouldn't be worried too much about the shorter fluctuation, but yeah, so 11,000 crores of that sale also happened. Maybe that sale was not absorbed. So what really happened and what is the implication for you? So obviously when the market hits such a low and we all use words like panicked and tanked and things like that, you will be a little worried about what happened. The broader markets fell. And the worst thing was the fall in the Nifty, Bank Nifty, and the Bank Nifty obviously fell because of the fall in HDFC Bank. So there are analysts who are saying that the bank margins would be under pressure, banks would not be able to raise lending rates, but they are paying higher prices for the borrowing that they are doing, so their margins could be crushed, and that is the reason why the market fell. The results of HDFC Bank were not too encouraging, and SBI also was downgraded. So all these contributed to the fall of HDFC, and HDFC is a heavyweight in the bank index, and so therefore the bank index fell. Let us look at what some of the research people are saying. No, I am not going to name them. So they said after a sharp rally there was profit taking happening because people needed to take some profits off the table. I partially agree with the sense that people should be booking profits, but for booking profits I am sure there were better counters, because it's not that too many people were sitting on profits in HDFC Bank. What happened in HDFC Bank was the quarterly results were not too encouraging, people were not too happy, and therefore there could have been some dumping. But if the FII is selling, it definitely was not caused by one quarterly results. Let us look at it this way. Having lost Mr. Deepak Parekh to retirement and Mr. Aditya Puri to retirement, people must have been saying, okay, this share is not likely to do well in the immediate future. Then there are the merger pangs which would have been there. Are there advantages for HDFC Bank? Yes, a lot of shares got cancelled by the holding company shares have got cancelled, which means that your EPS should be going up. They will be saving a lot of money by closing down many of the offices where HDFC Limited was paying rent. Some of the people in HDFC Limited may have left, and therefore there could be some saving in salary. Will all this kick in? Yes, it will take time. Are there challenges? Yes, of course there are huge challenges. Three big challenges. One is a merger of so many people's mindset. Second is the technology. HDFC Bank is not really great in terms of technology. I keep countering a lot of problems, so merging those technologies would not have been very easy, and getting more business by the new branches which have been opened would not be very easy also. But do remember, it's a holding company for insurance and mutual funds, and those are doing well. They would be minuscule, but when you take the SOPA or sum of parts valuation, SOPV, you are going to get some value in some time. So what are the people saying? I am wondering whether to name them, because it is a public document. It has come into my inbox. So domestically, even though the economy is doing well and corporate earnings are good, some profit booking and moving has to happen, says Geojit Financial Services. again people are blaming the weak global cues to it and saying some profit taking has to happen. I still don't agree with the profit taking bit. Profit taking bit in HDFC Bank is very unlikely. Not too many people would be sitting with profits at 1580 or things like that. Yes, it took a support at 1527, but I don't think that's a support price which was given to me by one Mr. Yogi, who is an analyst from Chennai, and he had said 1527 would be the support price, and it did happen at that price, but I'm not a big believer in technicals. US Treasury rose on Tuesday after central bankers in Europe pushed back against market expectation of an imminent interest rate cut. Right, so the yield on the benchmark increased by 11 bps at 4.064. Now, what implication this has is the money will not leave the US to come to Indian markets so easily because they're getting a very good yield, right? So they were getting 5% sometime back, now it's down to 4%, which is still very attractive from what it was sometime back, maybe 2 years ago. 2022 it started going up, so 2021 numbers are not very far away now on the US Treasury yield. Will the rate cuts happen? People's expectations are high, but the rate cuts may not happen. So therefore, the fund flow which was expected from the FIIs into India is not happening. So those people who are fronting, saying, oh, when the FIIs come, they will buy HDFC Bank, they will buy ICICI Bank, they will buy State Bank of India, Larsen and Toubro, whatever, all the big wigs. So some of the people were saying that this money will come and therefore we will be able to sell, may have run out of patience and they may have sold. Also, I somehow feel that HDFC Bank needed a Brahma, Vishnu and Mahesh, and I think Sashi Jagdishan will do a great job as Vishnu. A lot of maintenance work has to be done. So combination of the fact that people are running out of patience, saying, oh, if FII money doesn't come, how long should we hold on to HDFC Limit Bank? These are all questions which may have triggered some sale, but am I really worried? That the US rate cut will not happen and therefore the FIIs inflows will not come? No, that does not bother me. Our own Indian domestic SIP flows will be there. The FII flows could get delayed, but it is not going to go away. Personally, I am a shareholder of HDFC Bank. I was a shareholder of HDFC Limited, so now more of HDFC Bank. Does it bother me, these kind of fluctuations? No, I look at it as a price, as a good price to be buying. So yesterday, which means on 16th and 17th, I was actually a buyer, but I was waiting at low prices thanks to somebody who had said 1527 is going to be the support price. So yes, I was waiting at a lower price. I got. Will I be buying more? The answer is yes, I will be buying more. Should you be buying more? It's a call that you have to take depending on what percentage of your money you want to put in HDFC Bank. And another caveat, if you are a holder of ULIP and mutual funds, etc., there is a good, especially large cap or large and mid cap, good chance that it will already be there in your portfolio. So you may not want to overdo it, right? So after the technical view on the index is, it is for the time being 22,120 will act as a resistance, and while the immediate support is 21,930 and the next strong support is 21,800, says one broker I don't wish to name. And what else could happen here, and what should you do as a person holding HDFC shares? The call is really yours, but I would rather be holding a lot of buy reports. I'll just look at some of the prices. I think Motilal Oswal was the first one to give a buy report, and I'm looking for that report. And the net interest income rose 28,471 crores in Q3 of FY24 from 27,385 in the previous quarter. The core net interest margin was unchanged sequentially. It rose 3.54% on total year-on-year basis, and its gross non-performing assets were reported at 1.26% versus 1.23% last fiscal. And I think there was a buy report in Motilal Oswal came out with a buy report recommending that the price would reach 1950. It has reiterated its buy rating. The brokerage firm underscored that HDFC Bank reported inline growth earnings. Right, so there are other brokerage houses which I had seen reports which had come to me saying we estimate HDFC Bank to deliver faster deposit growth rate 19% CAGR, while the loan growth, which is enough for the loan growth rate of 17% CAGR. We thus estimate HDFC Bank to deliver FY26 return on assets and return on equity at 1.9% and 16.7% respectively, said Motilal Oswal. Nirmal Bang Equities Nirmal Bang Institutional Equities have also said it's positive on the HDFC Bank for the long-term perspective due to its high growth potential of good capital position, etc., etc., and the target price of 1994. Right, so 1994, if it is going to hit very quickly, then it's not a bad buy. Kotak Institutional Equities has also raised the fair price from 1860 to 1800, which and ROE of 16 to 17%. HDFC Bank's reported earnings were marginally weak, but we still have a rated a buy. Nuvama Wealth Management has also it has reduced its target price from 1730 from it was at 1770 earlier. What does all this mean? I don't see any sell recommendation from any of the brokerage houses, but you have to decide on the basis of your own position that you have. And when I'm talking here, I'm talking only to the investors. What a trader should know, the trader should know maybe there is a support at 1527, maybe the support is at 1480. I have no clue, none of those technical supports. As far as I am concerned, I would use all those technical supports as an opportunity to accumulate and hold, right? Thank you.